And we are live from Bloomberg's world headquarters in New York. I'm Shonali Basak.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
And coming up, Bitcoin rebounds after 2 weeks of extreme volatility in April. Pretty much unchanged now on the month.
Then the Trump family is all in on crypto with stablecoins, meme coins, a Bitcoin mining venture, and of course, NFTs.
And we're going to discuss that NFT market with the CEO of OpenSea, the largest non-fungible token marketplace.
That's all ahead right here on Bloomberg Crypto over the next half hour. First, though, a snapshot of Bitcoin over the last week. Extreme volatility was how Shonali described it. It's the perfect way because, yes, it has been a wild ride. It actually fell to the lowest level of the year last Tuesday. Look at that. It was below $74,500. That was before President Trump surprised markets by saying that he would pause so-called reciprocal tariffs on dozens of non-retaliating countries. Since then, though, Bitcoin and other risk assets have surged as a result. Now it's hovering just around $85,000, just shy of that. Still, though, it's down about 20% from those all-time highs that it reached in January. For the week, up a little more than 10%, Shonali.
And if I may say so, Tim, it's crazy because all the historic moves in U.S. equities of late have made Bitcoin volatility look weak. When looking at the 10-day volatility trends this month, you're looking at stocks turn more volatile than Bitcoin, if you could believe it. Over the long term, over the years, Bitcoin remains more than 4 times as volatile than U.S. stocks, and that's according to a report from Goldman Sachs.
Well, joining us now at the desk is Galaxy Digital Head of Firmwide Research, Alex Thorn. You guys didn't think this was going to be a show about trade and a show about tariffs. This is supposed to be a show about crypto, but I want to start with trade.
Yeah.
I want to start with tariffs. We just talked about the volatility that we've seen over the last couple of weeks. How do you view what's happening here in the United States and its impact on Bitcoin?
Yeah. Hey, Tim. Hey, Shonali. Thanks for having me back. It's driving markets, right? I mean, I want to say tweets, but really truths, right? Could come out at any moment. The pause, for example, the 90-day pause and those blanket tariffs were surprising and created a lot of uncertainty. The initial announcement that was not, in fact, reciprocal tariffs, but instead was trade imbalance numbers, I think really spooked markets. I mean, you remember that week, a couple weeks ago. Look, I mean, I think Bitcoin is trading like a macro kind of risk asset. When you look at it, it's not down 9% year to date. NASDAQ's down 11.4%, right? So, I mean, these are people are uncertain. They're fleeing golds at all-time highs, basically, up 22% year to date. So Bitcoin isn't really trading like that yet, but I think some people are hoping it may.
Do you think it will?
I think it probably will. I think if you see foreign countries in particular that need countries that don't have the global reserve currency or have to hedge against U.S. dollar exposure, you could see Bitcoin start to play a role there.
Now, while we're going through this macro uncertainty, what about all of the questions that still remain under the Trump administration for the changes to the industry that are expected? Frankly, given the volatility, we have not seen crypto take off, and we still have a lot of questions to be answered. What's on the top of your list?
I think you've got questions about the strategic Bitcoin reserve is a big one. I think that people know and expect will impact Bitcoin markets. I think all of the stuff emanating from the Securities and Exchange Commission as it relates to tokens, disclosures, what might be a regulated pathway for token issuance, which some are calling ICO 2.0, which they're working on. They've said they're working on. Those are big questions. I think when you and then of course everything in Congress, market structure, stablecoin legislation. I think a lot of progress has been made, a surprising amount of progress, right? But a lot of it's still in process. It's not actually rubber meets the road.
It's crazy because the ICO boom 2.0 is what I've been wondering about. Are we going to see that? Now, there is another prediction that you have that I want to drill down on. You think that the U.S. will buy Bitcoin for their reserve. That's quite the prediction. Why?
Yeah, at the end of last year, we had predicted that they would hold but not buy, right? That they would formally create a stockpile. And then, of course, in March, they had the establishment of the Strategic Bitcoin Reserve and United States Digital Asset Stockpile Executive Order, which
how many times did you have to recite that before you went to bed at night?
Which specifically prohibited the government from selling Bitcoin and ordered Commerce and Treasury to find out budget-neutral ways to buy Bitcoin, while simultaneously prohibiting them from buying altcoins and leaving the management up to those departments for altcoins. I think a lot of progress has been made. They were 30 days after that order supposed to have delivered to the White House and the Presidential Working Group an accounting of the government's Bitcoin. We think that accounting has been delivered. We haven't found out yet what the accounting says. But it seems like they're making progress, and you've got Treasury Secretary Bessent literally saying Bitcoin is now becoming a store of value. You've got a drumbeat from Bo Hines and David Sachs, and it just seems plausible at this point they'll buy something. There will be a buy. That's the extent of which I'm.
Where do you think they'll get the money to buy? Because they've been clear with the American people that tax dollars will not be spent to buy digital assets.
Yeah, budget neutral is hard. In a lot of ways, budget neutral is not a real thing. I feel like if cash goes into the general treasury, there's a lot of claims on that cash, let alone reducing the deficit, which the government has made a big point. So to then use any cash to do that. But what you could do is the altcoins that are in the sell-only digital asset stockpile, you could sell some of those for Bitcoin.
There's an opportunity cost in doing that, though. You're essentially having to convince, maybe you don't have to convince anyone, but you're saying, okay, this money that we're getting as a result of selling these assets is best used, in our view, by buying Bitcoin.
Agreed. And I think that's why one of the elegant ways is to take some altcoin or something in that stockpile, which, let's be frank, the government and Congress barely even know that the government possesses. Right? It's not like some big pile of money everyone's aware of and wants their piece of. But also, to be specific, you could sell an altcoin in an altcoin BTC pair and never touch cash at all. No cash ever has to flow into the general treasury. Could be an easier way to get to a promises made, promises kept on the SPR.
Now, I want to go back to the ICO question, because certainly there are a lot of exchanges that have come out after the administration has talked about maybe a lighter touch than the last administration, at the very least. But do you worry that the exchanges are going to go too far, that they're going to list things that shouldn't be listed, that they're going to leave so much to the retail investor that the retail investors in too many times will be holding the bag?
Yeah, it's a great worry to think about, and I think this Securities and Exchange Commission is thinking very clearly about that. Hester Peirce has written, despite all of this work they want to do to create a pathway for token issuance or the other things they're working on, she said explicitly, we do not tolerate scammers, liars, and frauds. Right? So I think you're thinking about something more like a new issuance disclosure process that is very similar to an equity issuance process, but perhaps where the issuance itself is a regulated and disclosed investment contract, but that the tokens that later emanate from it do not carry a securities tag along the way. So there will be a process. I think in the past administration, they said, come in and register, but there was no way for a token issuer to register at all. Literally, the forms the SEC has were inapplicable to the token issuance. And so you had this Wild West emerge. I think if you create a regulated pathway, it'll be safer for consumers.
There was this concern during the previous administration that it was too harsh when it came to crypto. No question the community thought that in many different ways of explaining that to us day after day. This administration has so far taken a different tack. Are you concerned at all that if we do see some sort of Wild West emerge, we could actually see damage to the space as a result of leniency and kind of allowing people to do what they want?
I think the last administration freezing out the industry, encouraging by a lack of a regulated pathway, issuers, exchanges, entities in general to do it offshore. I mean, that was the incentive structure, right? And that resulted in things like FTX being offshore and foreign, every altcoin and issuance being issued offshore with no SEC disclosed documentation, right? If they create that pathway, it could encourage companies and issuers to move onshore and follow rules if they finally establish them. So I am optimistic that actually meeting the industry where it is and building rules around that, rather than creating unenforceable prohibitions, which is what they did last time, could actually be safer for consumers. But it is a valid question, though, Tim.
I want to talk more about tokenization, because one executive after the other. We talked to Kraken CEO yesterday, Robinhood CEO. All of these guys want to make traditional private equities, think SpaceX, think XAI, tokenized on their platforms one day, right? But what are the limitations of that? Because just by tokenizing it, you're not giving your investor a stream of cash flows necessarily to the asset, are you?
It's not inherent, but I think with the composability of tokens and public blockchains, you could design almost anything. I think the question is much more regulatory, what they will allow. And then there are tricky questions about how to how would national exchanges be related here? What are the Reg NMS or NBBO or best execution and all these rules that apply to the traditional equities ecosystem? How do they apply if you are trading a stock in a token form, right? We don't know the answer to that. Lots of people are working on it. I just want to add that you have Bitcoin, which is widely adopted, right? And it's the asset. You have stablecoins, which everybody realizes are very useful. That is tokenization, but it's the most liquid thing in the world, the US dollar. Like, you're starting to see some sovereign debt, these money market funds. Maybe that's the second most liquid. There is an Occam's razor aspect where US equities seem like they might have a product market fit here if you can figure out the regulatory.
But to your point, you cannot imagine that NASDAQ, the New York Stock Exchange, will allow that to happen without a fight.
I think that's fair to say. I think that's fair to say.
Alex, we got to leave it there. That is Galaxy Digital's Alex Thorn.
Alex, always good to see you. Coming up, how NFT demand is changing under the Trump administration. We're going to discuss with the CEO of OpenSea, Devin Finzer.
And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. Now, the Trump family has invested in various crypto projects, including NFTs, decentralized finance, stablecoins, Bitcoin mining, and meme coins, and the paper gains are approaching $1 billion. Bloomberg's Olga Kharif joins us now. She reported on this. Now, Olga, when you look across the new budding crypto empire for the Trump family, where are most of the gains being made?
So, the family, like you said, has invested into a whole slew of different projects over the last 2.5 years or so. And I would say the most of this paper gains are in the meme coin that was launched right before sort of an inauguration, as well as, but you know, we see them across the board. Trump started by issuing NFT collections, then now he has footprints and everything from, the family has a Bitcoin mining venture, there is a decentralized finance project that's ongoing, so lots of different ventures.
Olga, as you point out in the piece, Sonali and I spoke to Eric Trump a few weeks ago. We asked him about potential conflict of interest or perceived conflicts of interest. He said, I don't work at the White House. We've believed in crypto for a long time, and there are no conflicts. Essentially saying he doesn't talk to his dad about this. What about outside of his family, though, and elsewhere in the industry? Are folks who you speak to, are folks in the industry who are not necessarily involved with the Trump family projects, are they concerned that that the family is getting too involved?
There are definitely concerns like this. So some people in crypto just are worried about projects like the meme coin in general, because you know, so many meme coins have left, especially smaller investors holding the bag, and the market cap of this particular meme coin has declined quite significantly since it was launched. So there are questions about, you know, what kind of damage could this do to the way investors, especially retail and smaller investors, perceive crypto. And there are definitely concerns about conflicts of interest as well, because just right now, for instance, there's a lot of work being done in Congress on stablecoin legislation, and the Trump family is working on a stablecoin as well. So some of the things that are being worked on are sort of seem to be the exact same things that the administration or Congress are paying a lot of attention to right now as well.
Bloomberg's Olga Kharif joining us this afternoon. Do appreciate it, Olga. Good to see you. Well, let's discuss more when it comes to NFTs and NFT marketplaces with the leading platform for NFTs. It is OpenSea. The firm's CEO, Devin Finzer, joins us now. Devin, that's exactly where I want to start, given that the president's family is involved when it comes to NFTs. What do you make of the Trump family being involved so closely in the category?
Yeah, well, I think, if you zoom out a little bit, I think it's really indicative of crypto broadening from just a more niche area of technology to something that is really being adopted across the board by the mainstream, right? And NFTs, for example, this was something that really caught the attention of consumers in 2021. But then it sort of went through this phase where the use cases, the innovation, the companies in this space started building out this infrastructure. And now you have sort of the general revival of consumer crypto. And I think, the fact that the president of the United States is involved in this to some degree is really indicative of just the level of adoption and how far we've come as an industry to really push the boundaries of the technology. So, I think if you zoom out, I see it as generally a good thing and, an exciting indicator that the use cases of crypto are being explored more broadly than they were just a couple of years ago.
The crypto industry has been saying that the Trump administration would bring regulatory clarity to crypto, but what exactly does that mean for the NFT market? Is there any hint of clarity for what this means for you?
Well, I think, the first kind of hint of clarity, which I think is a, really big moment for the space, is really the end of an era where the SEC was pursuing a strategy of regulation by enforcement and going and targeting each of the biggest actors in the space, many of which, or all of which were really good actors, trying to do right by consumers and hitting them with Wells notices and SEC investigations. And the fact that that has ended is such a positive indicator for not just for the companies in the space. OpenSea being one of the companies that now has their SEC investigation ended, but also really consumers, right? We actually have a lot of artists and creators on our platform that were incredibly fearful that the SEC would go and hit them with actions as a result of the things they were experimenting with on blockchains. And I think the fact that that era is over is really the beginning of an era where innovation can happen in the U.S. not just from companies but from the smaller players as well.
Devin, I'm sure you get this question all the time, but I mean, just talking with some of our producers earlier today as we were preparing for this, there's still a lot of people who are out there who are like, I got to be honest, I don't get the value of NFTs. Their critics would argue there is no inherent value in some of these things. Make the case for us, to those who don't buy it.
Sure. Yeah, I mean, I think one thing that's been a common misconception around the NFT space is that they're just art, or they're just JPEGs, or they're just collectibles. And I think the important thing to remember about NFTs is that they can represent the ownership of any item, right? Whether that is a piece of art or whether it's an item inside of a game, or a piece of physical item, right? And so what we're really excited about is now that we've built the sort of technical foundations, projects and builders in the space can go and use the technology to represent all sorts of digital assets. So, we talk to game developers who, instead of building centralized traditional economies, are instead exploring the use of NFTs to give users actual ownership inside of their game. We talk to projects that are tokenizing physical collectibles like Pokemon cards or sneakers and putting them on chain and allowing them to be traded as NFTs. So what we're really seeing on the ground floor, even though maybe the mania isn't there, is really the build out of all of these really exciting use cases.
Devin, what is the value proposition for an NFT marketplace, given that we have seen a number close down, including that of Bybit and LG?
In this year?
Yeah, recently.
Yeah, so I mean, thanks. First of all, OpenSea, started as an NFT marketplace, but we've since evolved with the launch of our new platform to really be the hub where you discover, trade, and own anything on chain. So that includes NFTs, which of course are unique digital items, but we also allow people to trade currencies as well. And we think there's this whole world of on-chain economies that really is in line with this theme of the tokenization of everything, whether that's stocks or financial assets or digital gold like Bitcoin, or these sort of longer tail assets like digital art or gaming items or those sorts of things, right? And what makes an NFT marketplace really powerful is it's a single destination to trade any digital item, right? And for the first time in history, we've had markets for digital items in the past. There's marketplaces inside of games, there's marketplaces for domain names, but there's never been one-stop shop where you can trade all sorts of digital stuff. And that was the original value prop of OpenSea, and it continues to be the value prop as we expand beyond just NFTs to to tokens and all sorts of digital assets.
Devin, we got to leave it there. That is OpenSea CEO Devin Finzer. Now coming up, the stablecoin designed for inflation protection. We're going to tell you about USDI next. This is Bloomberg. A new cryptocurrency designed for investor safety is being launched. USDI is a dollar tracking stablecoin whose value is determined by the increase in the U.S. Consumer Price Index since December 2024. Bloomberg's Mike Regan here to explain. Now, there have been different stablecoins being launched. This time, this has more bond-like qualities, doesn't it?
Yeah, stablecoins, dare I say, almost getting to be a crowded space, something like 200 stablecoins out there. So a lot of projects trying to differentiate themselves, either offer some kind of yield, or in this case, a really kind of a fascinating idea is to just index the value of the stablecoin to inflation so that the purchasing power will always be equal to the end of December of 2024. So in other words, if inflation is 3% in 2025, this thing will be worth $1.03. And another really sort of thing that caught my attention of this is it's not a crypto project. This is being run by this guy Michael Ashton, who's a veteran of the bond industry.
Well, that's exactly where I want to go. Who's this for?
Yeah, it's being marketed to accredited investors.
So you have to have over $1 million.
Why isn't it just tips, right? I mean, why?
Yeah, well,
don't quote me on what the requirements are for accredited investors.
So to sort of give them the sales pitch on it, tips can lose value. They can lose money. They are inflation protected, but the bond market, as we've seen this past week, can go haywire sometimes. And even regular treasuries, sometimes that yield that we've seen in the last few years was actually below the rate of inflation, so you had a negative real yield. So this is kind of a real safety play for investors who want to sit in cash but want it to be protected against inflation.
Bloomberg's Mike Regan, thanks so much for joining us. That is going to do it for Bloomberg Crypto this afternoon. But don't worry, we're going to be back here, same time, same place next week. This is Bloomberg.